Hello, hello. Mic test. Mic test. So I hope you guys are doing well. Mic test. And the mic test is also working. Mic test. Okay, guys. So I'm gonna wait for a few moments here while I prepare the other things required for doing these webinars. And in the meantime, those of you who have joined in live, do let me know how is the audio as well as the video at your ends. Hello, Madhavji, how are you doing today? So we will be heading for what do you call 34 plus 4 we have done. So I can see a few people have joined in. How are you guys doing? Let me know in the comments. Fine and good evening. Good evening to you as well, Madhavji. Just a few more moments before we actually start off the webinar. I'm just preparing a few things which will be required during the webinar. All right, so it looks like we are all set. The audio and video are all working. However, I don't seem to be seeing a lot of participation in the comment section. Hopefully that will pick up during the webinar, right? If somebody can confirm that both the audio and video are working fine again, that will be nice. But I have checked at my end, it seems to be doing good. So here I'll just start off with the legalities and stuff. So here is the quick disclaimer on screen suggesting that all content presented here is purely for educational purposes. I'm not soliciting any buy or sell. If you decide to go on to use these views presented here for your trading, investing, or for any other purposes, then you yourselves will be liable for your profit, loss of profit, or any other situation arising from you using these views presented here. So that is for the quick disclaimer here, and you can read the rest on screen here. Hey Steve, how are you doing? And thank you for letting me know. So I think that's ample time for everybody to join in who was going to join in live, right? And before we start off, I'll just like to give a quick introduction like always. So guys, my name is Neerav Yadav. I'm the admin and owner of 50 Years Market Analysis, which is the YouTube channel where you are most likely watching this webinar broadcast live. Here, this is the 35th in the series of trading opportunities webinars that I have been conducting on every Monday, Wednesday, and Friday for quite some time now. We always start these webinars at 2 p.m. GMT. If you want to join in, that will be nice. That way you will be the nearest to catching these opportunities which we discuss in these webinars, right? And the previous webinars, you can watch all of them by hitting the live button on my YouTube channel. And you can see all the past webinars, the 34th webinar, the 33rd, 32nd, etc., are all here. Okay. Other than this webinar, I like to point out that I'm also the author of Think with the Markets, Secrets to Achieve 80% plus accuracy using Elliott Wave, which is available on Amazon's Kindle platform. You can use it and enhance your knowledge. And coming back to the site, 50eyes.com is the website. where I have been producing my work or hosting my work, whatever is the appropriate word here, for quite some time now, since 2016 actually, right? So you can check my video course, and if you have done my video course, you can send inquiries for my personal classes if you are interested in that kind of thing, right? And apart from that, the most important thing which I'd like to show off before we begin these webinars, my 6-year industry leading track record of all the analysis and forecasts that I've done. So you can see it over here that generally in this industry, even 60% accuracy is very high, and I have 6 years plus consecutively. Seventh year we never calculated because I don't have the time right now. So for 6 years consecutively, I have a 80% plus track record. Here you can see 2021, the date, the instruments discussed, crude, gold, S&P Nifty, etc. What was the analysis on the instrument, the actual video link, and what happened about of the analysis which we did, right? So on and so forth. You can just scroll down and check all the analysis done in 2021. We did manage to get 37 correct out of 45, right? Leading to an accuracy of 82.22%. So on and so forth. You can check 2020, 88.52. Again, you can just scroll down and check 54 out of 61, right? Now, further on 2019, you can just scroll down and check 84.88%, 2018 84.61, 2017 87.65, sorry, and 2016 83.34, right? So that's the way these things are. Everything is transparent and everything is what do you call trackable, or you can just check it anytime you want. So that just goes on to show my level of expertise in my chosen field of work, which is the most advanced form of price action analysis which I use, called Elliott Wave analysis. I have obviously done my own proprietary research, which allows me to achieve this level of expertise here, or accuracy, I must say, right? And that should conclude our introduction or about us part. Lastly, before I move on to the actual charts, if you are not following me, then you should follow me on Twitter. Handle name is at the rate of 50 underscore EYES. That way you will be able to get all the updates for the upcoming webinar streams, the links and everything. And in case I do something other than the webinars or any new project or book or course or whatever, it will be posted here, right? Lastly, if you want to remain on the pulse of everything, like extremely connected, then of course you should join the emailing list by clicking here on email subscription on my website and putting your email ID and whatnot. I mean, actually, just the email ID and name. Right. So that's about it for the introduction, guys. EURUSD is greater than something. Let's head over to EURUSD and check what is it greater than. Right. And yeah, before we proceed, the way we do with these webinars are we will go over the charts of EURUSD followed by EURCAD, USDJPY, EURJPY, crude oil, WTI crude oil actually, gold, XAU USD, S&P is 500, Nifty 50, Bitcoin. Every time I discuss a particular instrument, at the end of the discussion, I will ask if you guys have any doubts. You can type it in the comment section if you have any, right? And that's the way we proceed with these webinars, right? Now heading on to EURUSD and checking the scenario of what's really happening here. So first of all, let me just quickly remind you guys of the past discussions. So previously on EURUSD, like previously on XYZ show, like a TV commentary at the beginning of a show. Anyways, so previously on EURUSD, we were discussing that we seem to be moving up in an impulse, right? And we were able to catch multiple different trades on this thing between here to here. But most recently, we were able to catch this turn, right? And then we were able to take the trades till this high. Okay, that was quite enough of a movement from a trading perspective, right? And then the further analysis was that I'm not sure if I discussed this one in the webinar. Let's see when it happened. Around 3rd February. So I must have discussed this in the, yeah, I did. We did a webinar around 3rd February. So we did discuss this setup that we were expecting that this market may have indeed completed the impulse to the upside. So what I'm really talking about here, for those of you not much familiar with the concepts in Elliott Wave, so what I'm talking about here is this simple pattern. This pattern is called an impulse. In the upward direction, it consists of 5 legs. The first leg is up, the second is down, and you get the idea for the remaining, right? And in the impulse on the right hand side, which is the rough diagram, if you match it with the left hand side price action, you will quickly realize that it looks like we have completed the same on the actual chart as well, right? The characteristic property of impulse is that once it's complete, we should see a correction. And in this case, we were able to catch this correction at the break of this trend line. This was a valid trade setup, which was already discussed in the webinar. It should have been. I don't recall exactly because there was a gap on Monday. I was outside, so I did not do the webinar. So uh, I will probably have to check, but most likely, not most likely, 100%, I would have discussed this setup. The second setup would have been a diagonal setup, but it did not really help us because they both seem to have triggered the trade right at the same time. As you can see, the white line and the orange line both intersect at the same time, and that's exactly the time the market fell and gave us the sell setup. So this worked out beautifully and perfectly, right? And now, as for the current complications or implications of this structure, is that we expect that this market can continue the downward movement. It's a can because if the trend is still intact to the upside, then there is no certainty of downward continuation. But as such, the bias remains that short-term bias this market is bearish, right? So what is the trade setup in these kind of situations is that we generally look for retracement till the 50-60% retracement level. So in this particular case, our 50-60% retracement level on Euro USD is coming between around, roughly speaking, 1.028, and the next level is 1.010. So in between these levels, we can see the market move, right? And even if it does not go there, I personally think that this market can at least give some more downside movement, right? More specifically, what I'm saying is that once the impulse is complete, once this leg like 1 up, 2 down, 3 up, 4 down, and 5 up is complete, we expect at least 3 legs in the downward direction, right? So here is the impulse completion. So we expect at least 3 legs. First leg down is called an A, next leg up is called a B, and the next leg down is called a C. So this is a general expectancy, and based on this expectancy, I am of the belief that it is better that we look for only short setups from a swing perspective. And from intraday perspective, yes, of course, there should be some counter trend movements here, right? Probably one of them I will catch. I was also doing some scalping in the morning, not very heavy, but smaller positions I was playing around with, and some were long, some were short. So you get the idea. The point is that swing perspective, we will look for this leg down, right? Intraday wise, of course, if you are doing intraday, you should know better what you are doing. And let me see if there's anything else here. Not really. Let me know, guys, if you have any doubts on this counter. If not, just type in understood or clear in the comment section. In that case, we can head over to the next chart, which will be the chart of EUROCAD. Thank you, Steve, for the confirmation. What about the other participants? That will be nice to see some more comments here. But in either case, I'll be moving now to the next chart, EUROCAD. So if you guys are following me for the past few webinars, then you already know that we discussed this scenario, right? If you are not, let me quickly summarize it from this point of reference. Point of reference is basically the starting point of our analysis. So from this point of reference, you can see this green trend line. Now it will soon become orange, right? So we actually discussed that below this trend line, we will see a downward movement. We had the targets placed here as target 1, here as target 2. I'm just summarizing quickly for those who are new. So just bear with me for a few moments, dear old subscribers. So what I'm saying is that below this trend line, this is the movement we were expecting. And then again, we caught this leg down at this point in time. And then we caught this much movement. So we have caught two movements, right? And you can always go ahead and check the past webinars around 20th December and the next one around 2nd January, in which these movements were discussed and caught in live market conditions, because we do these webinars live. Okay. Now coming back to the actual price movement or price action. At this point, we had already discussed that it is a swing long, but we did not have confirmation for the exact reversal position. We still don't have it, but anyways, the strategy was that you can enter partial longs on this market, and that it could move like an A down, a B up. Let me see one thing. 1 second. Yeah, so we were saying that we were expecting that this market could give an A down from this point of reference, a possible B up, and then a C down. So all in all, we already knew of this possibility that this market could go lower before taking out the last high, which was or is around, roughly speaking, the level of 1.46389, right? So this is all expected and this is going as per plan, right? So now what we really need to do is we need to formulate the proper positions when we will be actually interested in really taking a trade in this market. So speaking from my angle, because after all this is my analysis, what kind of stupid thing was that to say? But anyways, my perspective at this point in time is that we can see a small leg down again. It is not required because as such this market has fulfilled the basic requirements of the possible upside movement. So, but what I personally would like to see is a more clear formation for the last leg, which is expected to be a wave 5. If it is doing something else, then of course we will update the counts accordingly. But let me just put out the whole actual count right now. So this is what I'm expecting, something like this. So once this fifth is complete to the downside, then I will start forming trades based on the position of the high of wave 4 and the speed of wave 5, right? So probably let's just say the market does something like this, then we can place a buy alert here, right? This is speaking from standard trade setups. Basically, this is something you can do every time, but again, it won't work every time. You will have to consider some other factors, such as I said, the speed of the wave 5 and the formation of wave 4 itself. So that's why I'm not proposing a proper entry level at this point in time, but just keep it in the watch list, right? It may give us a good long setup in the days to come, right? So that pretty much covers all the main requirements of Euro USD. And one thing to keep in mind, if this market for some reason goes below this target to level, which is coming around 1.42615, then that's not going to be considered a good thing. And at that point in time, we may have to reanalyze the chart and probably this count will have to be updated. So you can treat it as sort of invalidation level for this count, or at least a cautionary level, not invalidation. So that's about it for EURCAD. Let's head over to USDJPY. Let me know, guys, in the comment section if you have any doubts or specific questions regarding EURCAD chart on this Elliott Wave analysis which we just did? If not, do type in understood or clear or something to confirm. You're welcome, Steve. And let's head over to USDJPY now. So USDJPY has been a little bit of a problematic chart. And if you guys recall from our last discussions, I actually got out of a trade here and we had to close one in unfavorable situations. And it is still not very clear to me what it's doing. Just to conclude, this is our point of reference here for the starting point of this analysis. Price level around 138.174. We were expecting that this is a A down, this is a B up, and this will be a C down, but we were expecting a little bit lower level. That is at least 126.26 or lower than 126.26, right? So based on that, we deduced that maybe the possibility of wave B continuing is still there, right? However, yeah, it is still there. So the analysis is at this point is that the wave B might be continuing as a complex or some sort of corrective structure. And it is kind of not that useful at this point in time to try and predict which sort of corrective structure it is, because as you can see, it's already has been forming very complex formations. Right. So long story short is that once this wave B is complete, which could be here, by the way, or it could be somewhere within this price range, which is the price range of, let me be specific here, 127.216 to 134.799. So, as I said, to conclude it, B can remain sideways within this range, anywhere in this range. And once B is complete, then we expect the next leg down, which we have been expecting for quite some time now, right? And the targets we have already discussed way too many times. So we are expecting either 126.218 or lower levels. So the next thing to keep in mind is that we are just looking for the completion of wave B. It can be plausible statement to say that one thing. Let me check one thing. Yeah, it can be plausible to say that the B is complete here. It is a valid count here, but as I said, everything here is a bit unclear, right? And B might be complete here, and I can take some shorts based on that, but those will not be a full sized positions. Those will be intraday shorts based on what do you call my intraday position sizings. So yes, I will look for some shorts here in the coming sessions. As a matter of fact, even in this session maybe as well. But as I said, those will not be full sized positions, and the risk of B continuing sideways and that affecting our trades negatively is still there. So just keep that in mind, right? So USDJPY. Other than this, I don't think there is much important things to add here. You can just let me know in the comment section if you have any doubts. And yeah, one thing to keep in mind, if it really does trade above 134.761, then we will probably have to, not probably, most likely we will have to relegate this count in that case. So that's your, let's say, invalidation level. So I'll wait for your comments in the comment sections while I move over to the next chart, EURJPY. I'm not seeing much of a participation here. Is the stream still online? And if it is, where are you guys? Yeah, Steve, that's true. The recent news events do seem to have introduced some volatile moves, which are definitely messing up with the counts. But that does not seem to be the case with the EURJPY that much. It does seem to be affected a little less, and that's what we are going to discuss now. So let's discuss EURJPY now. And thank you, Jill, for the confirmation. Where have you been all this time? So EURJPY, EURJPY, I'll just quickly like to draw your emphasis to the bigger picture count on the 4-hour chart from this point of reference, which is at 148.404. Roughly speaking, we expect this market is forming a diagonal or has formed a diagonal. We have labeled it as, let's just say, wave A. And we have already discussed so many times in these webinars. If you are not following, then you should, because we have got a lot of trades on this counter. We have got this part in this leg down and the whole of this leg down, right? I'll just remove the counts here for a second so you can see. So yeah, this box movement and this box movement we have already caught. And of course, there were so many other small trades, but I'm just pointing out the bigger trades which we have caught so far, right? So the point of all of this is that you should follow every single webinar regularly and watch them back to back. Otherwise, you might lose touch of what we are analyzing and why I said what I said, right? These are all codependent webinars. I build up on the analysis I discussed last time, and it is not possible every time to discuss everything thoroughly. Okay. Coming back to the current analysis, we already have this analysis for a long time. Like literally, when the market was somewhere here, I predicted that this market can go sideways as a flat or flat type of structure. And we already also know that this market should or could take a resistance between the price level of 142.936 and the upper level is 144.239. So we already know that this market can take resistance over here. So based on that, our trading strategy has so far been that if this market really does go within this box range, then we will like to take some shell setups and most specifically near the upper range. However, the market has not given us anything of that sort. So what is it really doing here? So I believe that it is still possible that this market goes up within this box resistance zone and then reverse. However, because we don't have a confirmation for same, what I will do is I'll just wait and watch for the market to take out this level. And as a matter of fact, I might take some counter trend trades here as well. Let me explain that why and how. So the fact is that if we really have a strong resistance level, which we think the market might test out, then if the market starts to give a strong leg here, then that strong leg might very well be short lived because it's a counter trend trade. Short lived means basically spike kind of moves, like you see a move from market goes up there and down here within 5 minutes, maybe within 15 minutes. That will still be a very strong or fast move, right? To catch these kind of moves, I have placed an alert here, and if I see some activity which will be again be triggered by this alert, then I will possibly look to take some short term longs or scalps or very short term trades, by the way, right? So that is one way I would like to trade this market. As far as the selling is concerned, I do not have a strong sell setup as of yet, and I will be more interested in exploring the short side trading opportunities once this market takes out my downside alert around 140.041. Right, it is just an alert to notify me. I will not necessarily be taking a short right away, right? So that's my take on what do you call EURJPY, right? Quite clear sell setup. If it goes in the range, then we will look for sell off, and straight out falling is possible. But as I said, I don't have a exact confirmation for it, so I won't comment much on it. Right? Let me know in the comments, guys. What's your doubt if you have any, or if not, just let me know you are clear on it by typing in clear understood. Okay, Madhavji saying fine. Thank you, Madhavji. Philip is saying sorry driving. Well, don't comment when you are driving, Philip. Just focus on driving, right? And yeah, I'll just wait for your questions if there are any while we load up the chart for WTI crude oil. Thank you, Jill and Steve, for the confirmation there. And where is WTI? West Texas Intermediate. So there is the chart on screen for our favorite, or one of the most favorite instruments. One fun fact, this is the instrument I have been following since the very early days in trading. As a matter of fact, most of the things I know, like not most, many things I know in Elliott Wave in trading and speculation, I have learned by trading the charts of crude oil. Okay, so now let's discuss the actual chart, 3115. So crude oil, if you guys are following me for the past webinars, then you already know that we have an expectancy that this market might be giving an impulse. First, we were thinking, by the way, a diagonal, like something like this, but like a wedge pattern, but it did not do that. Now the expectancy is that maybe it's an impulse, but at this point, it's a little bit of a drag, right? And let me just explain what the impulse may look like before I, what do you call, clarify on why I'm saying it might be a bit of a drag for it to go up now. Now, if it really is an impulse, then it should go something like this, right? Maybe the 3 will be a little bit higher. And I mean, these are just rough levels. Don't take them at the actual price levels. I'm just drawing the rough structure in which the market might proceed, not the price levels. The price levels are just not in alignment with the counts. So this is the way we expect the market might go if it's an impulse. But as I said, it looks like a drag because this market has sort of established itself a little bit too much near the downside, right? So what do I really mean by that? Is the fact that if you were following me for the last webinar, you know already that we also have alternate views. Actually, the main view is that we still have downleg remaining. So the alternate view, other than this impulse going up, is that this might very well be just a sideways movement, right? Because see, this is a Y. So this could be a triangle, maybe, right? It could be many patterns, right? It does not have to be a triangle. I'm just drawing what looks to be one of the simplest patterns which will give this a straight off fall, or which will make this price action go down straight off, right? So if it is something like that, then it will not be very surprising for us to see a straight downfall in crude oil, right? And because the downside possibility is becoming stronger and stronger, because the price action, as you can see, is establishing itself in the lower ranges, right? And also we have a running bearish count. I don't think trading longs on this counter is very wise at this point. Maybe I might take some short-term longs here if it really does go above 81.176, but short-term basically means intraday kind of setups. So there the situations are different. Intraday means you are more or less sitting on the screen, you are absorbing it, and you are ready to take the loss or close the positions as soon as you feel like something is off, right? Since in this webinar currently I'm not seeing an intraday setup or a very clear setup per se. Yes, short term wise, intraday wise, I could have taken some longs here for a few ticks, but that's not something I like to do on crude oil. That's something it better suited for Forex pairs. So anywho's, long story short, wait for bearish setups to become more clear. Bullish setups are there, right? But we don't want to enter anything bullish until it really goes above 81.283, right? And lastly, this market falling off straight down from here is not a very distinct possibility. No, actually, I should say that will not be a very unique possibility. That is something we are already expecting. So keep that in mind, right? Anything specific here? Let me see. By the way, you guys do let me know in the comments if you have any specific questions here while I'm just checking a few things here. Yeah, one thing worth pointing out here is that in case the wave Z is already complete, then this sideways movement will be a base formation for wave 2 for a extremely strong wave 3 up, right? But as I said, we don't have any confirmation for it, and we can catch some part of it when this goes above 81 point, whatever that level was, 81.16, right? So that's just as one additional thing to keep in mind, right? Don't want to fluster you with too many things, because not everybody who watches these webinars most likely will understand everything here. So let me see, there's a comment here. T is saying if oil is triangle, then wave 5 nearly complete before fall. BC. You mean wave E, right? There is no 5 in triangle. So, but I think if that is what you mean, then you are saying that E is already complete, right? That actually is partially correct, because as I said, there are too many things this thing can do, right? If this is an A up, a B down, and let's say if this is the C, this is the D, and this is the E, then yes, E most likely may have completed, or it might go a little bit up before the fall. But the problem is that we don't have a confirmation for the C itself, right? C can definitely go a little bit up as well. So this might very well just be a flat or something else, and this will be the B, this will be the C. So that is why I said that it can still go up, even though our primary swing analysis is suggesting bearishness, right? So don't get too excited about the E or the triangle possibility. That is just one of the many things which can happen on this chart. It's not a very strong possibility. Just pointing that out. So hopefully everything is clear here. Jill, Madhavji, and Steve. Also, I think I have clarified your doubt, Steve. So let me know in the comment section, and we'll move over to the next chart of gold. I seem to be having a request for USD CHF. Sorry, Maggie, I'm not taking any requests in these webinars. We just follow a strict number of instruments, which are, I think, 7 or 8 instruments. Sometimes I do add on one stock or something like that, but that's also very rare. So let's head over to our next chart, gold. Interesting developments here. Thank you for the confirmation, Jill and Steve. And gold, let's have a look at what gold is doing. So those of you not very much familiar with my earlier work or have not followed the past webinars, I'll just like to quickly draw your emphasis towards the fact that actually 1 hour should do. I would like to quickly point out that we have been able to capture parts of this leg up, right? This leg up, specifically this leg up, we were able to capture till the box region. All of this, by the way, was in live market conditions. Everything which I'm pointing out here, this leg and parts of this leg. And I specifically remember I was able to capture this short leg down followed by the move that followed. So actually 12 plus trades, 12 big movements and some minor movements we were able to capture on gold, including these boxes, right? And you can, of course, as I said so many times, just check anytime I'm saying that I was able to point out this move or capture this move. You can check the date here and just check the past webinars by visiting the 50 as Market Analysis YouTube channel in the live section. Just check the webinar near that date and you will see me discussing it. So this will prove actually educational for many people as well if you are a learner here, right? So you can use it that way, and you can also just use it any way you want. Anyways, so getting back to the actual discussion, we have got a lot of moves, yada yada yada, right? Now let's see what's going on, right? That's what we are interested in right now. So if you guys recall, we had the two counts running in. I had a count which was suggesting strong up move as an impulse, other was a correction. Now see, if this thing is a correction, then this is our point of reference. Price level is, roughly speaking, 18, 16, 14, right? 1614. So from 1614, our analysis seems to be suggesting, damn, writing on this thing. Okay, so from 1614, our analysis seems to suggest that it may be up for an A, right? It may be down for the B and then up for the C. Now, see, in this particular case, it is still possible that this market is going sideways for the next leg up. We don't have any confirmation for it, so I will like to analyze both possibilities. So firstly, if this market is still forming that sideways for the wave 4, then we expect the market to either reverse from this price level, roughly speaking, around 1879, and the next level would be the price around 1827, right? So these are the two levels where the market can reverse, right? Thus far, the movement has been very fast, so that's why bearish possibility cannot be ignored. Okay, it becomes a prime contender at this point in time. So what do we do here? So what do we do here is actually just to wait and watch, right? We wait, and the specified levels are what we look out for. It is already at the first level, right? So we look out for what? We look out for possible sideways movement, right? Possible sideways movement within this box range, right? So if the market moves within this box range, then we will observe the price action and some other things, right? And based on that, we can then later determine that the possibility of this market moving up is there or not. Okay. Second thing is that looks more likely is that this market will go later on and head over to 1827 levels. In that case, again, we will have certain other factors, but most important one will be that the market remains established a little above 1827 and does not start to close below 1827. Right, that will be the other thing to take note of. So as far as the current price action is concerned, I have not taken any trade on gold for I think the last two sessions or something. Let's say this week, I think even if there would have been a trade, it would have been very minor. Otherwise, I would have recalled it. So, anyways, long story short is gold is a wait and watch. Levels I've already discussed. Price action to look out for, I have discussed it briefly, right? And going any further in detail would not be coming under the scope of these webinars. As such, I think there are few good points I can discuss, but they might take 20-30 minutes in themselves, right? Let me know, guys, if you have any specific thing to ask here, then I'd like to answer that. And I personally think that gold might give me some intraday shorts here. Does look that way, but I will have to analyze a few more things. Let me know in the comment sections in the meantime if you have anything you want clarified here. Okay, so let's head over to next chart of S&P's 500 and thank you, Steve, for the confirmation. What about Jill and Marav G and others? I can see a lot of participants are online. So yes, let's head over to S&P's 500. S&P's 500, we just discussed it in the last webinar which we did, and it seems to have not done really anything specifically against it, right? So what is it really doing? Let's see. So as per our discussion, we are of the view that I'll just not do the whole analysis. If you want to check the bigger picture views, just check the webinar number 34. It's available on YouTube. Just quickly summarizing for new viewers, just go to live section and on my YouTube channel, and webinar 34 or 33, one of these two will have the S&P chart discussion in detail. And do keep in mind all these webinars are time stamped, so it should not take you much time to figure out which one is it. So, anywho's the long story short is that I still think that this market is following the count we discussed earlier, right? So it does look like from this point of reference, price level 3493, we may have what looks like a wave one up over here, and then a two down may still be continuing. See, actually, two down may be placed here as well, but in this particular case, it does look like it has some more sideways structure remaining, right? So I am not going to analyze it in much detail because I personally think that this can become a little bit more deceptive for a few people. So what I personally think is that around this price level between 4230 to 4305, right? Between these levels, this 4230 and 4305, we may see a reversal, right? So this is the arrow taking it to those levels, and then this is the possible reversal. Right? And if that happens, then this will open this market up for a new long trading opportunity, which is represented by this CN colored arrow, right? So this is the outlook or overview view of what I'm expecting on this counter. Now, why I have not labeled this interim sideways or what do you call completely overlapping kind of structure is that this can be interpreted in two three different manner, and long story short is that no matter which level of depthness you go on this, the outlook still remains the same, which I just discussed, that this market can still give one more leg up followed by a small correction before heading higher to the expected wave 3 or C levels, right? So because the analysis sort of remains more or less the same, I have decided to remain a little bit on the high time frame and not dive too much into details, right? Actually, I should be able to get a little bit more clearer view by the time we discuss things in the next webinar, which will be on Friday, right? As we always do webinars on Monday, Wednesday, and Friday, 2 p.m. GST, in case you are new here. So Friday will be 10th of February. Okay. So yeah, not going too much deep in S&P. If you have anything specific to ask, just quickly let me know in the comment section. Otherwise, we'll move on to Nifty. Will be followed by our last chart of discussions, Bitcoin. Thank you, Steve, for the confirmation there. So here is the chart of Nifty's 50. So if you guys were following me for the last webinars, you know very well that I have mentioned so many times that the bearish possibility is still not completely relegated. Right? However, the bearish possibility becomes weaker and weaker as this market forms or not forms, just takes out the last highs. So as such, this market has taken out the high of 17,868. And next one, which is the most important one actually, is 17,969, roughly speaking. Right. So by taking out this high, this market has given us indication that maybe the downside moment is complete. Okay. This is not a confirmation by any means, but an indication itself is quite enough for us to start forming counts and possible strategies for upside trades. So before I discuss those, let's just quickly have a quick rundown of what the count is. So we are currently of the view that from this point of reference, around the price level of roughly 18,202, we seem to be having a wave A down, right? Now the B up, if we consider the B up complete here, then the C can be considered complete already, which would give rise to bullish possibilities. Now, what are those bullish possibilities? The bullish possibilities on this counter are that the wave 1 is here, the 2 is here, and then this is forming possible nested impulsive formation in the upward direction, right? There are some other impulsive counts, but I'm not going to go into too much detail because even in an impulsive count, anything it does like a pullback like this much is still valid because the market can retrace as a matter of fact to at least 99.9% as a wave two in an impulse itself, right? So long story short is that this market may be preparing for straight up movements. It can do it in multiple different manners. The most strong one looks to be like this. That is to say that this is the expected count. Let's just say 1 second. Dot one here and dot two here. So basically, if it stays above, what is this, around above 17,676 level, then this market is still sustaining the bullish possibilities with quite some strength, right? Excuse me. So, and given the fact that this market is already doing things which are sort of bullish, like taking out this high of 17,870 level, uh, I think that it is better to wait for only bullish setups in the coming sessions unless we see something very significantly out of the ordinary, right? So long story short, Nifty, we wait for clear bullish setups, right? And currently my plan is that if I see a pullback like this, like represented by this orange arrow, then I'll place conservative trades above the last high, above 17,897, and short-term intraday and scalps, etc., can be taken if we are able to predict the reversal of this leg down, right? Those are all intraday kind of things which I have to, and I do post in my private Slack group. So, but that's just the plan. I'm just giving you the overview, right? So that's our take on Nifty, right? Do let me know, guys, if you have any doubts on this counter. If not, just let me know by typing in clear. And let's head over to our last chart. Last chart is Bitcoin. And so far, Bitcoin has been doing precisely as we expected it to do, right? Thank you, Steve, and thank you, Jill, for the confirmation here. Let's see now what's the story with Bitcoin. So last time, if you guys are following me, then not just last time, way before last time, somewhere around 12th January or before 12th January, maybe, we were able to predict that if the market goes higher than this level, roughly speaking around 18,100, then we can see a strong up leg. Not only that, we were able to predict the precise target for the resistance level, which was this box range. And from 18,100 level to this box range, we were able to capture the whole move. Literally, the market stopped within the box range, which was having the high around 21,560. I'm just saying these things for new subscribers and new viewers, right? So that they know the strength of the analysis that I do. Okay, so now that it is clear we were able to capture this leg, our further analysis suggested that if the market closed above this high, roughly speaking, the price level of 23275, then we can see some more bullishness, right? Now, above this high means, generally speaking, establish above that high. So the market seems to be forming a lot of price action, but you can see all of this is weak price action. I personally think that it has sort of established, not in the classical sense where it's taking that level as a support. So, but not everything has to go classical, and not everything is that clear in trading, right? Think about it. If everything established itself above the important levels, nice and dandy, then wouldn't everybody figure out that trade? Right. So, going with the practical knowledge or the experience I have, I think it is safe to say that our count is still working out. And what is our count? Let's just quickly have a recap of that. Last time on Bitcoin. Anyways, I was trying to imitate the opening few seconds of any TV show where they say last time on show so and so episode. Anyways, leaving my failed attempt at that. What I think is happening here is we are in a sort of an impulse. Most importantly, or let me just remove some stuff here. What is this? Okay, so most importantly, what we see here is that the counts are sort of working out here. And what are we having as a current count is that from this price level of what is this? 15,500, let's say. I'm just roughly taking these levels. We are seeing a possible impulse, right? And those of you not familiar with impulse, an impulse is this kind of structure which has 5 legs. The first one is up, second is down. Rest you get the idea, right? Now, what I see over here is that likely the 3 is already complete here. If the 3 is already complete here, then that basically means that the fifth is remaining, right? So fifth is remaining in the sense that once the 4 to the downside is complete, then the fifth is remaining. Now for the 4 to the downside, we have already marked that we expect it to complete around 22,062. And the next level where we expect it is 20930. So around these levels, we expect that this market moving downside for the wave 4 may complete. But generally, what I've seen is on the counter of Bitcoin, the movements generally complete before the expected targets of retracement. So it will not be very surprising for us to see a move straight for the upside instead of going for the mentioned levels here. So long story short is that from actual conservative standpoint, we would like to wait for the market to at least go to one of these levels, specifically at least this one, right? If the market starts to form some reversal patterns or something significant which tells us that this market can reverse, then we will look to formulate some long setups. And even if we don't do that, we can just simply place an alert near the high at that point in time, because if the market is really reversing, then of course it should do one thing, and one thing, it should cross the high. So if we see the market go down and then the alert is triggered, then that's a long trade for new highs, right? And targets we have already discussed in the last webinar. We said that we expect roughly around 18% of move at tops. That is maximum 18% moves from whatever the reversal level is. So if the market reverses from this level around 22,062, then we place our 18% level around here, and target comes at around 26,091. Okay. Same goes if the market reverses from the next level, 18% goes around 24,864. So that's our take on Bitcoin. So far, it's working out quite well. Be on the lookout for the mentioned levels. Nothing really much to add here, right? So let me know, guys, if you have any specific doubt or anything you want to check on this chart. If not, then do hear my request, which is to hit the like button. And if you are a new viewer here, then definitely look to subscribe here, because we go in live 3 times a week, Monday, Wednesday, Friday at 2 p.m. GMT, and you wouldn't want to miss the next trading opportunity. And as such, we have been able to capture 34 big moves in these webinars. This webinar, I'm not sure if we actually Euro USD we caught, so that makes it 35. So we have gotten 35 opportunities in these webinars so far. And I'm just talking about the big moves, no, not the smaller moves at all. Okay. So if you want to check them in the future and get these updates at the tops at the earliest, follow me there. Nothing much to add here other than the fact that I will appreciate heavily that you guys share my content. Please try and share it with at least 3 people in your circle. If you have 3 WhatsApp, Facebook, Twitter, whatever groups of traders you have, please do share it there, and share it among the friends who trade, right? Because we definitely need more viewers to sustain these webinars, right? If the participation is not as expected, then it's only going to affect you guys inversely. Okay, so also if you are not having membership in too many groups or WhatsApp or whatever these groups are which people are following these days, then I'll request you at least retweet my tweet on Twitter handle and share the link on your Facebook or Twitter or whatever social media you use. So that's my small request with you guys, and I hope the content has been beneficial, and I'll see you guys in the next one. You're welcome, Steve. You're welcome, Jill.